Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report from Monday, July 24th, 2023. Before I jump into all the charts for the day, just want to encourage you to, as usual, please click like if you haven't already. Please subscribe to the Wicked Stocks YouTube channel and please share the content, if you would, with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis in the Triple Q and the SPY, weekly analysis in the NASDAQ 100, S&P 500, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week out to the 3 to 5 month near-term investor, always looking for 20% swings on those individual stocks. And we offer a 5-day free trial with your entry into the payment gateway. So you get 5 days up front and you can bow out at any time if you don't like what you see, but I suspect you will like what you see. Anyway, let's check out the charts for Tesla, talk about that market. I'm going to start with this chart here, the weekly chart. You're well aware that we pushed through in a substantial way that rising channel top that this week is at 290.33. Now, we did close above the same formation on the daily chart several days last week by the required 1% margin. But obviously, we sold off huge the last couple of days of the week last week, not closing above 290.33. This does, of course, underscore the importance of the weekly settlement, which I do remind people all the time, whether it's those weekly stock picks we put out or the Tesla analysis or the Triple Q or SPY. It really is, when it comes to longer term moves, longer term signals, it really is the weekly settlement that you really need to follow up with and verify, because without it, the signal just isn't valid. And it actually sort of, in terms of the reliability of a longer term signal, it is enhanced a great deal. And we have numbers to really back it up. It is enhanced a great deal with the weekly settlements. The daily settlements, by a degree, the weekly settlements substantial in terms of the line studies that we use. So if we were to close, for instance, and I'll just jump right to that. If we were to close this week at 293.23 at the end of the week on Friday, that is a 1% above that 290.33, then we would have a complete buy signal that should play out up to the 414.49 all-time high. I'd say within probably 3 to 5 months of doing so. But until then, holding below 290.33, this market can fall back into, these are moving targets. You've got 185.55, that former long-term channel top that we settled above a couple of months ago, that started the buy signal from my perspective, and may actually eventually yield 414.49 anyway over the next year or so. But it is the interim. What's this market going to do in the interim? Will it fall all the way back into the 180s over the next couple of months? Or will it stabilize and turn higher, closing above 290.33, that formation by a 1% margin? That remains to be seen, of course. We do have, and I'll just jump to the daily chart right now. We did close below this meaningful channel bottom trend support at 261.98 today. We did close below that Friday, but by a hair. I think it was by less than 80 cents or around 80 cents. And I think you can see just by looking at this chart that it was by a degree. And so is it a sell signal? I'll say this, that if you were shaken out of a long position, or if you entered a short position, I don't have a problem with that. It's just you obviously want to see the market open unchanged or lower on the day Monday, because if we open even slightly higher, that formation is at 261.98, and it wouldn't be much of a feat for Tesla to open right back above that formation. So, if you're short this market, you want to see the open below 261.98 clearly. If you're still long, you want to see the market open above 261.98. It's about as simple as that. And I'll mention it on the weekly chart. This is a minor point, but this week I bumped it up to, an important 4-star level, 263 even. It was around 257.43 actually last week. That I still have that as a minor point down here. 263. in my opinion, you want to see the market gap above or open above 263 as well. I mean, that if you're long the market, you want to see them open above not only 261.98, but I think even on the weekly chart above 263 would be nice. Until then, opening below 261.98 allows selling pressures to continue to play out as we move into the week. And this is really the big picture. This sell signal, which is in play, does anticipate a 198.54 long-term channel bottom objective. And I can show there's also a speed line on the way down that we can talk about in a moment. But it really is this channel bottom at 198.54 is rising. And I'll mention that the week of August 21st, excuse me, it actually will rise and coincide with this former high going back to February 217.65. So it may, and I think probably would only be a sell-off into the 210s, the 210.65 high, the pullback high from February that lasted for several months. I think that is, you could probably call that the 3 to 5 week target, because over that time frame, this meaningful rising channel bottom at 198.54 converges with that area anyway. On the way down, we do have a meaningful rising 1/3 speed line that is projected off that January low. I have that as a weekly support level, and I consider this a target. This week, perhaps, with present volatility, perhaps we could fall all the way to 236.52 over the next several days, over the next 3 to 5 days. That is a real possibility where I would anticipate a weekly low. And from 236.52, we could bottom out and rally back into the 260s or wherever this former channel bottom is, where we could top out again on a weekly basis and fall off. And so it could be something like that. It also could be just sort of a steady descent where we really don't get much of a bounce off of 236.52. Closing below 236.52, I will then, within 2 to 3 weeks, anticipate this channel bottom, which once again, by the week of August 21st, converges with this February 217.65 high. Anyway, I'm going to jump back to the weekly chart for those of you who might be short or shaken out of a long position. We did also put out a key reversal high, or a bearish engulfing pattern, as they say in candlesticks, last week. In other words, we put out a new pullback high following the January low, and we settled below the previous week's low. That's 265.10 as a minor point. And so that is also a bearish emphasis. But, this is a sign of weakness. It is typically, if you read the textbook, this is a sign for bearish trade in the weeks to follow. But once again, the reliability is by a degree, and so it could just be a simple process of Tesla is shaking out the longs by pushing through this formation, capturing longs, shaking them out, and you might have been part of that crowd. And now, are they shaking out the short positions? Might we get the reversal to the upside? And I go back to this chart. 261.98 to 263 even is our pivot point, not only for the day, but this has ramifications really into later August. In other words, yes, 3 to 5 week objective remains in effect below 261.98, anticipating the 198.54 channel bottom. That is something that I'll continue saying now as long as we continue closing below 261.98. But if we close above today, 261.98, and also above 263 even, that is a stabilizer. And in fact, I'm just going to jump to this chart here. This is actually the same chart. Let me go back to this one. And I'm going to circle this area. It's this formation here at 261.98. I'm going to open that up and take a look. Let's go with the day itself, kind of the intraday dynamic, pushing or opening above 261.98. And yes, it would be, in terms of sort of bullish clarity for the day, above 263 as well. If we opened above 263, I see 272.41 as a likely intraday objective. That is just an intraday resistance area, nothing more than a 3/8 upside Fibonacci over the last 3 significant trading days. We could top out here for the day, but if we push through 272.41, I think 278.68 is likely. And so, and so that level, 278.68, can contain daily buying pressures, session containment. And if we close above 278.68, we are right back to sort of a retesting within just a few days that channel top on the weekly chart at 290.33. I'm going to go back to this chart again and kind of or sorry, this chart again in nuance the day itself. And so holding below 261.98 will keep this 255.62 speed line in reach. So this is nothing. This is just an update from last week. If we open below 261.98, there's still a test at 255.62. This rising one-third speed line projected off that late April, early May low area can contain intraday selling pressures. We can bounce off of here back up to 261.98. I think if we break 255.62 today, we have a good high for the day. How low can we go? Could we go to 236.52 today? That is a possibility with recent volatility. It is a real possibility, especially if we open lower, a gap lower, open below. Now, last Friday's low was 255.80. And so if we open below 255.62, I think that is a sort of the makings of a sell-off right out of the gates, where 236.52 should not be discounted as a possible daily objective. And once again, 236.52 able to contain weekly selling pressures. I'll give this long-term speed line the benefit of the doubt. We can rotate back into low 260s within several days of testing 236.52. But once again, closing below 236.52, secondary sell signal as we move into August. This 198.54 channel bottom then expected within a matter of 2 to 3 weeks. Once again, converging with that 217.65 February high the week of August 21st. So, what to do? Let me talk one more time because we're 11 minutes and I don't like to go this long, but lots going on here with this chart. If we close today above 261.98, and yes, we have the same formation on the weekly chart at 263 even, but I think just a mere settlement above 261.98 is a neutralizer, or is the early sign of a neutralizing of that sell signal, the significant sell signal that played out last week. And yes, I'm even including, the key reversal high that played out. I think if we close above the 261.98 formation, you should allow 278.68 within several days, where we could top out possibly through the balance of the week, but overall closing above 261.98 for the day actually will keep 290.33 in reach, I'll say by the end of next week or sooner. So that could flush out any new short positions, obviously, that may have played out last week. A lot of people watch these bearish engulfing patterns, key reversal highs. Many people, many funds, traders got short Friday afternoon based on that development alone. And so will they be flushed out to the upside? And the answer to that is yes, I believe so. If we settle today above 261.98, it's about as simple as that for me. 278.68 then expected within the week, 290.33 by the end of next week, and then we'll be watching that formation closely, obviously, to see whether we settle above it by a 1% margin. Until then, susceptible to falling back into this zone of support, which we could call sort of 185 to, what is that channel bottom? It is 200.61. So into this zone of support, if we continue falling. Anyway, 13 minutes, unusual. I'm going to leave it at that. Thanks for watching. Please click like, share, subscribe, and check out wickedstocks.com.